Hello and welcome to the Rask Network. What you're about to hear and see is limited to general financial information only. Please be sure to speak to your financial planner or refer to our financial services guide available at rask.com.au/FSG before acting on the information. Kate Campbell, welcome to this episode of the Australian Finance Podcast.
It is wonderful to be back, Owen, today talking about micro investing and all the ways people can get started investing with a very small amount of money, because we know a lot of people say to us, well, I can't invest, I don't have a lot of money. That's something that wealthy people do. So today we're going to explore some of the different options that you can start with $5, $50 or $500 and take your first step on your investing journey.
Yeah, I like it. And for those of you that are on YouTube, we will do a bit of a screen share. So we'll just show you through some of the different accounts. So if you are looking to get started investing, this is the episode where you can actually just watch along as we just show you what they look like and how they kind of work. But if you're not, we'll talk you through it. If you're just listening, we'll talk you through it as we go as well. So I guess the first question is, Kate, what is micro investing? Like, how does it work? How does it differ from other forms of investing?
The main thing is micro investing is just letting you start with a smaller amount of money. Now, we're going to talk about some different apps and platforms today, and they're all slightly different in the way they work. So they might let you invest $5 in a portfolio that's already built for you, so you don't really have to do much decision making. Or you might be able to invest a really small amount of money in a company you know and love, maybe overseas. So micro investing is just this concept of investing our money into things like shares without using a huge amount of money. So it's a really easy way for people to get started, and it comes in lots of different shapes and sizes, as we'll see today.
Yeah, so we're talking like if you have $10 or if you have $50, these types of amounts, whereas traditionally it would be, $500 minimum, or in the past, maybe even more than that. And the key thing, if we just scratch the surface a little bit, the key difference between this type of investing and a lot of the other types of investing, like say if you buy individual shares or individual exchange traded funds through a broker like say Self-Wealth or even Perla, who is a sponsor of the show, typically you pay a fixed fee per transaction. And you might need, let's say, $500 and you pay, say, $9 or $10. And that sounds okay. And you're like, well, why couldn't I just do $5 and pay the fee? The thing is, sometimes these brokers have minimums because they have fees on the other end. So that's why they charge you $9 or $10 per transaction. But with the micro investing platforms, what they do underneath the surface is they effectively pool your money together with other investors so that all of you collectively have more buying power. And that's how they bring down the price of what they can offer you. But the key thing to understand is it's typically a different type of legal structure underneath. The difference is if you were to buy, say, $1,000 of shares in your own name, you have what we call a HIN model that would power that most of the time, which means that you have a direct ownership of that individual thing that you're buying, like say 10 Commonwealth Bank shares, for example. You would actually be able to be identified as the single owner of those 10 individual shares. Whereas in a micro platform, you still have ownership of those shares, but you have only typically a fractional ownership. So you have a very small part. And we call this a custodial model. It's very popular overseas. In fact, it is the only model that I'm aware of overseas. It's just in Australia, we have the other one, which is the individual ownership model. So basically, your money's pooled with other investors in a fund. And that fund is then buying the things that you instruct the broker to buy and sell for you. So that's kind of it. But the way the fees stack up, Kate, is one of the things that people will notice. Did you want to maybe just broadly explain how these micro fees kind of compare to other types of things?
Yeah, I think that's something to be aware of. Sometimes if you are starting with $5, the fees can seem quite high in comparison, when I might be looking at $10 for investing my first $1,000, but I might be paying, what's one of the examples? I might be paying $4.50 a month if I've invested $5. So in comparison, can be a little bit more expensive, but there's some different fee structures, and we'll provide you all the links in the show notes so you can go and explore this for yourself. But some of the micro investing apps, they'll charge you a monthly subscription fee, just like your Netflix, to manage your money. And that might be a set amount like $4.50 a month, or it might be a set percentage. And some of the micro investing apps will just charge you a one-off brokerage fee when you make an investment. And so that's kind of the two main models that I see.
Yeah. So as opposed to most people that are investing a few $1,000s at a time, for example, they'll just pay a once-off brokerage fee to buy or to sell. But most commonly, you will pay a monthly ongoing fee for every month that you're invested in a micro investing platform. And that can take different shades. Like there are some transactional fees, as you mentioned there, Kate. But the idea is that we know you have a small balance. So the way that we're going to try and charge you is, as a percentage over the month effectively, but it just comes out as a fixed dollar for most people. And this is why most people, I would say it's fair to say, they start with micro investing and then eventually they might decide to cash in. And they basically take their chips off the table and then they go and buy the individual shares themselves. And that's not always the case. Some people can have tens of thousands of dollars in these micro investing platforms, and that is totally fine. It actually is totally fine. It's the same thing. It's actually, believe it or not, it's actually the same type of legal structure that a financial advisor would be using for clients with millions of dollars. It's still what we call a managed investment scheme underneath, or a fund underneath, which have been around for decades. It's just that this new modern way of doing things means that these tech businesses have effectively said, well, we'll just take the best bit of that and we'll just say, open the door for everyone to come through, even with small amounts of money. And so investors basically have a choice, not just at the start, but also ongoing. Do I save up $1,000 or $500 and buy the individual ETFs myself? Or do I just start now with one of these platforms and I get in with a small amount of money? Kate, I know you're the kind of the legal eagle, I would say, the expert around here when it comes to understanding the difference between HIN and custodial models. Is there anything else that I've missed that maybe people should be aware of?
Probably something else to be aware of in some of the micro investing platforms. One of them is Raiz and one of them is Pearl and Micro. They issue you with units. So it's a little bit different to getting individual shares or ETFs on a brokerage account. You're getting units in a fund and then they manage that for you. So I know with Raiz, they pre-build portfolios for you. So they put all the pieces together and you get units in that fund, but you get to pick your own risk profile. And Pillar Micro does something similar where it has different ETF funds made up for you and you get to invest your $5 and you get a unit in that fund.
Yeah. So most people, when they think about investing in the stock market, what they say is they say something like, I own shares of BHP, I own shares of Apple, or stocks, it's the same word. But when you invest in a fund, what you get is something called a unit. And a unit is basically, like I said, that pool of assets just broken up into smaller units, and you just get some of those. So if you're a bit confused about I'm getting units, or it says units in any of these apps, basically that's what you're getting. But the idea is that by breaking them up into units, you can invest those smaller amounts. And you can treat your micro investing like a subscription. You can treat it like you're paying a bill every month, where you can say, you know what, I'm just going to automatically do like a BPay transaction or a direct deposit or whatever the case might be. You might automate, say, if you bank with ING or Macquarie, you might say, I'm going to do a recurring thing every month where I just transfer money in. Some of the apps will help you do that. They'll just have a thing that automatically does it for you. And it just automatically transfers in, just like I'm paying my Optus or my Telstra phone bill. And it goes into one of these funds. I guess a common question for absolute beginners, Kate, is can I lose money?
Yes. It's when you're investing, your investment can fall in value. And then if you sell, you might incur a capital loss. So your money has fallen in value and then you've locked that in. But we take a really long-term investing approach at Rask. So we're investing for a long period of time, though many people, when they start with micro investing, because they're only starting with $5 or $10, they might be really new to investing. So they're not thinking 10 years ahead yet. So I think that's why it's super important when you get started to start really small. Start with the lowest amount you can, whether it's $5 or $50. And then you slowly learn about investing from there and figure out what you want to be invested in. Because the very first thing you put your $5 in might not be what you want to invest in long term, but it's all of a learning process. And then when you're ready to start building your own portfolio using a brokerage app, you know what you want and you know how to invest for a longer period of time.
And I think that's so right. It's like kind of like these things are like investing with like the guardrails if you go to 10-pin bowling, or like it's got like the bumpers on the side, so that even though you can make mistakes and you can see your portfolio balance fall in time, because at the end of the day it is investing, as you said. They're kind of pre-made for you in a way that if you're a long-term investor typically, the ball's going to get down the other end. You're going to do pretty well as long as you stay with the program. And when we say that, we mean like 5 or 10 years. We don't mean like 5 or 10 days. And that can be hard when you're getting sorted and you're new to this. But that's okay, because if you are starting with 10 or 20 bucks, it's actually a great way to learn. And the good news is some of these platforms, or many of these platforms, have like some sort of like referral type thing, or join up, signing bonus, something like this, where you can get involved in investing. You don't have to put a lot of money on the line, and sometimes they'll even give you a little credit or something like this to help you on your way. With all that said, we might start sharing our screen, and I'll do this here. So the first thing we can see on the screen today is Perla. Perla is a long-term sponsor of the Australian Finance Podcast, for full disclosure. And I guess the key thing to understand with Perla is there's many different options. It's kind of like a platform, meaning that there are different ways to invest with them. But the focus of our conversation today is micro. And you can see here on the screen, it says, invest in a managed fund with 10 simple options that track popular ETFs. In other words, what it means is you can invest a small amount of money and you can pick from one of 10 options, and they're kind of pre-done for you. You just pick one of them and you put some money in. You can see they're really low fees, $2.30 a month, $1.70 if you just invest in one of the funds. And so it's actually a really easy and simple way to get started in investing. And I think, but given that we know the team at Perla, we know why they do this. It's because to try and democratize investing and get more people into investing so that you can grow from there. One of the questions is like, well, if I go into this, can I transfer my investments out of the micro strategy and straight into the regular shares, like where you buy and sell individual shares? And I don't believe you can. My understanding is you cannot, Kate, as far as I know, but you can just sell and then buy the other ones, or just keep them going together. And that's really, I think, one of the beautiful things about this is it's just simple. It's pretty low cost.
And you can start with $5 and you can automate things, which is really important skill, especially at the start of your investing journey, to just slowly get used to putting $5 aside each week into your investments. And I think that because they simplify it to 8 different options, you don't have the whole world of ETFs and shares at your fingertips. It actually just simplifies it to a few choices, so that when you're trying to make a decision, instead of having to pick from 300, you're only picking from 8. And they've got a bit of everything there. So you can build a little portfolio if you want, or you can just invest in one ETF like VDHG when you're getting started and you're paying your $1.70 a month.
Yeah, it's a really easy way, and no fee is charged while your investment balance is under $100. So that's great. Like, you're basically getting an investing service for free at the very beginning, which is wonderful. One of the other big names in the game is CommSec Pocket. Now, for this, you need at least $50 to start, I believe, Kate. And they are similar in the way that you have a select number of ETFs to choose from. But my understanding is with CommSec Pocket, you pay per trade.
Yeah, so it's about $2 per trade. The reason why the initial investment's a little bit different is because you have to buy a whole unit in an ETF. And so CommSec doesn't get to determine the price of that. So you have to sort of have enough to invest. So they've chosen their ETFs based off the price of the ETF, so to make it really accessible for people. But you get your own holder identification number. So you're getting a very similar experience to using CommSec, the brokerage platform itself, but it does have its own app. It's really simplified the investment language in the app, simplified the features, so it's easy to use and you don't have as many choices. I think you have about 10 options at the moment, which cover most things you'd want in the core of your portfolio. And I believe you can automate things as well. Yeah,
cool. So CommSec being one of the biggest brokerage platforms in the country, after many years, I'm sure, of people asking for this, they finally decided to launch this more simplified version, which is probably welcomed amongst people. And like you said, the key difference is that it has the holder identification number, but it also has the higher minimum. So that's kind of one of the things to keep in mind. Sharesies is a little bit different in that Sharesies is a full brokerage platform, but they make it easy because you only have to have a small amount of money to invest in basically anything. And what that means is if you suffer from analysis paralysis, maybe it could be a bit, I guess, maybe there's too much to choose from, but I think that's also positive in that there is a lot to choose from. So it actually makes sense that you would want to do that.
Yeah, and you can buy Australian, you can buy New Zealand, and you can buy US shares and ETFs. So you have a lot of options on the one app there. And I think their user interface is pretty easy. I found the app very simple to navigate when I've had a look at it in the past. Because there's lots of different options on the app, you do need to be mindful that there's different fees. So if you're buying an Australian company versus a US company, there's different fees involved there and different currency conversion fees. So I would look at their website. They've also got a calculator because they do have a membership sort of subscription option for brokerage. So have a look at that, but they sort of explain it all on the website.
Yeah. It's a kind of like pay as you go, or you can do the different plans, which makes a lot of sense for folks who are more familiar with that kind of thing, where you can kind of pay a set fee and you just kind of have the app ready to go. So I think one of the biggest, maybe even the biggest, is Raiz. Raiz used to be called Acorns in Australia. And basically Raiz is an app which is known for probably two things nowadays. One is that you get to round up your investment. So, for example, you can make a transaction. I don't know, let's say you buy a coffee. It'll take 50 cents. It adds this 50 cents to a little pool. And then once that gets to a certain size, it invests the money automatically for you. So I tap my card, I get my coffee this morning. I go and catch up with a friend and we have brunch, for example. I don't do that very often, Kate, but if I did, and there might be, say, like $3 or $4 sitting in there, Raiz could take that money from the account and automatically invest it in ETFs for you. And you can choose the strategy. So you could say, for example, I want to invest in a high growth strategy. I want to invest in a balanced strategy. And you can even invest in individual things now as well, like individual shares, and use the same functionality for a slightly increased monthly fee. The other thing that Raiz is really well known for, it's probably still emerging now, is the rewards program. So just like the roundup feature where money is automatically added, with Raiz, you can book your hotels or you can link your booking.com account, for example, and it automatically adds some money to your account based on the program that they have set up. So I'd say that Raiz is one of the more popular options in our community, but I would say also that a lot of people would use Raiz in our community alongside Perla or Raiz alongside CommSec, more the main CommSec one. That's what our data suggests. So our data suggests that CommSec is still the largest in our community, but second is Perla, and then third is Selfwealth. And you probably, people can understand why we've done a lot of education with these guys in the past, but a lot of our community also use Raiz because of the other features which I just mentioned. It kind of goes beyond just putting money in, even though you can do that.
Yeah, I think Raiz is how many people have gotten started on their investing journey, especially people I've spoken to in our community, just because it's super simple to get started with, and it does have all those roundup features, the rewards features, and it makes it really easy to start, and especially because they build the portfolio for you. All you have to decide is, do I want to have a really long-term focused portfolio or do I want a more shorter-term focused portfolio? And they have pre-built it. And then you get to use that as an exploration tool because it tells you, well, this is how the portfolio is constructed. These are the different types of things. And then you can start your learning journey from there because you've got a starting point for your research.
Yeah. There are other options that our community, it's just not represented as much in the data, but another platform, I guess you could say, and brokerage account is Superhero. And another one, which is a micro-investing platform, meaning that you invest in their funds, is Spaceship. A lot of people invested in Spaceship in our community, I think, before COVID or during COVID, but it seems to be less popular now. I think it's fair to say it's less represented than the first four that we mentioned, being Perla, CommSec, Raiz, and Sharesies. But these platforms are also, built in Australia, run in Australia, operate under an AFSL, which we haven't mentioned, but a financial services license. So these platforms are really relevant in Australia too. What else have I missed, Kate?
I think the main ones we wanted to cover, it's probably just worth noting that even though we're talking about them under the micro-investing banner, Stake's probably another one that you can start, especially with US. You can start with smaller amounts of money because in Australia it does have a holder identification number, so it does have a minimum investment size. But with the US, you can start with $10. And so that's another option to have a look at where you'll pay a brokerage fee, you'll pay a currency conversion fee if you are buying a US investment, but their pricing is quite clear on their website. And you can also invest in Australian companies like a normal broker like CommSec or Pearler. So that's another option. But it's just worth keeping in mind that they're all the ones we've covered today are slightly different in their own way. They have different options. Some of them are brokers and have a micro investing option like Pearler. Some of them will pre-build the portfolios. Some of them just let you invest in anything. So it's worth thinking about, well, what are you interested? Do you just want something really small and easy to start with, where you can start with $5? Or do you have an ETF in mind and you just want a platform that makes it really accessible to automate your investments with that?
I would also say, especially of the four that we mentioned, being Pearler, CommSec, Raiz, and Sharesies, and the Stake maybe as well, with these platforms, there's no fee to join them. So as far as I'm aware, there's no fee to join any of them, but there's no fee to join them. And these are really popular options in our community. So you can go and try them out. Some of them may take, a couple of hours, a couple of minutes to set up. Some may take an hour. Some may take a day to get the formal approval and you actually fund the account. But the point is you can go and test drive them and it doesn't cost you a cent. So you can just see what you like, see how it feels, get used to the investing. I know you went through a journey, Kate, where you kind of tried every broker. I kind of just picked one and just went with that one, not really doing that much research in the beginning, and then switched a few years later. But at the end of the day, they all operate under the financial services license. They have slightly different models and fee structures, so just see what's right for you. Like if you're investing $200 at a time, you're probably going to choose something maybe different based on the fee structure if you invested $2 at a time, for example. Or if you invested $2,000, you'd probably go with a broker platform rather than a micro investing platform. And so just find the one that's right for you based on the look and feel, based on the options that it has available and the fees that it has. Most of them tend to offer a wide kind of range, like a buffet. They may be restricted. They may not be everything, like say Sharesies is the everything, but they might not be everything that you can possibly think of, but at least they have 90 to 95% of the things you'd want to invest in anyway. So that's a good place to start. Like if you get through this episode and you're thinking, well, I'm a beginner, I've got a small amount of money, I want to get started, and I want to add some money regularly. All of these options are valid. You can just go and try all of them, or you can just pick a couple of them and see how you feel. Go and visit the website. If it looks good, give it a crack.
There's no harm. And then if you don't like it, you can close your account down. Just send them an email if there's not an easy function online. I think just testing and experimenting and being curious. And we'll put all the links in the show notes because this sort of stuff, the fees, the details, what they offer change all the time, especially with these newer technology companies. So make sure to check out the most up-to-date details when you're doing your research.
Yep. One thing that I might add is with some of them, just on dividends, some people will say, well, how are the dividends treated? I know this is a popular question that the Pearler team get. A lot of these things automatically reinvest your dividends. So if you, for example, if you invested in shares, like $5,000 worth of shares, in that instance, what you would typically get is the cash dividends, but in the case of, say, Pearler Micro, it's automatically reinvested for you just to try and make it as easy as possible. So starting investing with micro investing is super easy. Take a moment to look around, assess the options, and visit the show notes that Kate's put together. Of course, things do change, but there's heaps of information there to get you started. So, Kate, this was good fun. Thanks for joining me.
Thanks for listening, everyone.